Welcome to Merryn Talks Money, the Aftershow. This is where we unpack all the commentary you hear in our regular podcast. I'm Merryn Somerset Webb. This week John Stepek, senior reporter at Bloomberg and author of the daily Money Distilled newsletter, joins me, as usual, to discuss my conversation with Kokou Agbo-Bloua. He is Societe Generale's Global Head of Economics, Cross-Asset and Quant Research and UK Head of Research. Right. John, have you listened to this one?
I've read the transcript, again, because I always read it rather than listen to it.
Do you?
Yes.
I hope everyone else listens to it. But, what did you think of this conversation? Where would you like to say you absolutely do not agree?
Oh, I mean, I've got to be honest, my issue here, and I think it's actually a lot to do with the job description, is that if you'd given me a list of the questions you were going to ask Kokou before I read this transcript, I could have told you what all of the answers were going to be, pretty much.
Wow. I don't have a list of questions in advance. It doesn't work like that. But in future, I'll just in future, I'll just send you the list of questions. You can tell me the answers, and we won't bother with all this boring podcasting business.
If you'd given me the improv before you did the improv,
yeah.
I mean, it's not really a criticism so much as like it's okay. So the received wisdom is surely there's going to be a recession, but does the recession thing even matter that much? And interest rates have gone up at an extraordinary rate, but somehow everything's going to basically be okay because we've got enough time to roll off that. And if, there is a disaster, then it means, the central banks can cut interest rates anyway to stop it from being a disaster. So it's basically everything's going to be okay. And therefore you should own a diversified portfolio with
I did
a green
say to
tinge.
him that's not an acceptable answer.
Oh yeah, no, and I mean, to be fair, he threw out some ideas there. And there's a lot to be said for owning passive investments and all the rest of it. And transition metals, although again I'd sort of make the point that transition metals are fine, but you probably have to be a wee bit picky, because I mean, like, the lithium price has kind of like shot up and then collapsed when everyone realised that actually there's plenty of lithium in the world, and as soon as the price is high enough, assuming we even stick with lithium batteries,
which we may not,
it's not going to be the new oil. It's a pretty common substance, and as long as there's enough of it out there, it's just that we've never had to use it before. So I don't know. I know. Sorry, it sounds like I'm being like terribly kind of mean, but I think it's just at a high level. If you're not going to say something out of the ordinary about macro, then the rest of it's just sort of like kind of decimal points. Basically, it's like, is the recession going to be in this quarter, or is it going to be in that quarter? And at the end of the day, that sort of thing doesn't matter that much for investors. And then beyond that, it's kind of the kind of at the more detailed level, you kind of need to be a little bit pickier than just okay, we'll buy these transition metals or whatever.
Yeah, I suppose the thing that I would have picked him up on, in fact I did pick him up on, is this idea that everything will be fine because interest rates have gone up so fast that they can come down again. Whereas I tend to feel more that interest rates went up very fast because they had to, because the central banks made some enormous mistakes and let inflation get out of control. So we now have rates at what you might consider to be historical normal levels. So the idea that as soon as something goes wrong, we can drag them back down again to these historically extremely abnormal levels of, real terms negative or 1%, 0.5%, etc. So the idea that ammunition exists, I'm not sure that it does, because the central banks may, because they didn't always learn their lessons, but they may have learned a lesson about how very, very, very low interest rates allow for the misallocation of capital and also open the door to inflation. So even if something does go very wrong in the global economy, which I expect it will at some point in the not too distant future, I'm not sure that leeway exists, that put still exists.
Oh yeah, and because they went up for a reason, so it's kind of like, well, if they go back down, then you can't just say that inflation's going to vanish because it's convenient at that point for central banks to be cutting rates. I mean, one thing that I did find kind of interesting, or that I think is something that we could do with talking more about in a more specific way, is the thing about productivity. There's a lot of time kind of people talk about productivity and talk about, well, is artificial intelligence going to help with it, or is tech going to help with it? And I think it'd be interesting to just maybe break down, well, actually, how are these things going to help with productivity? And is there not an issue with the way, really, that we measure productivity? And like, one of the reasons productivity's fallen so badly in the UK, for example, but in lots of other places, is because our productivity measures are basically based on manufacturing industries being much more significant parts of the economy than they are. And if we all acknowledge that, well, actually, how does a hairdresser become more productive? What is the nature of an increase in hairdressers' productivity? And we're kind of like, well, you can't kind of measure that, and you're never going to get to a point where one hairdresser can do 3 haircuts in an hour rather than 2 haircuts in an hour.
No, that's simply not true. Haircutting takes too long. This is one of the conversations I have every time I go to the hairdresser. I say, how long is this going to take? And they take an hour. I'm like, how can this take an hour? How can this possibly, in any rational world, take an hour?
But man, this is why you always look so well groomed.
It should take 25 minutes to cut a woman's hair. Anyone's hair. Tops. Absolute tops. I accept that it's very skilled work and that it's difficult, but an hour? No. There is huge room for productivity gains in hairdressing. You've chosen the wrong example.
I don't, but you could just get a set of clippers and then that would kind of, boost productivity, technically speaking.
Mm-hmm. That would be great.
But would it actually boost productivity if you've got a whole lot of unhappy people with no hair?
I can't answer that. That's too much for me today. Anyway, but I get your point. It's very hard to raise productivity in the service industries.
But I think this is the thing. So we talk about this again at a kind of very high level, but I think a lot of the time it's, if we talk about the abstract number of productivity, without actually talking about, well, what would a more productive economy actually look like? And also, I think I find productivity a very abstract, difficult concept to wrap my head around. So I do not know what most of, for example, our kind of non-finance listeners think of whenever they think about productivity, because it's like I say, it's kind of like a concept that is infuriatingly abstract to me. So I'd like to find a way to break it down in more concrete levels, as in what would this mean for you? Well, I think what would this mean for these industries?
One of the things in the UK is that it's public sector productivity that has been such a disaster. And mostly private sector productivity isn't great either. But when you look at our productivity numbers, it's the public sector that is genuinely letting us down. And the place where I think most people can see that productivity could be massively improved is in particular in the NHS. And that's where when you talk about digitalization and you talk about AI, etc., an organization such as the NHS could be massively improved by a higher level of efficiency and productivity in middle management in particular.
Yeah, definitely.
And that's somewhere where we really could see dramatic change, which would have a huge benefit, not just for us and our health, but for our government finances.
And to be fair, on the private sector side, the kind of lawyer area and the process of buying houses and selling houses and all the paperwork that kind of has to be chucked in between parties. I can see that's another area where that could improve it. I mean, one point I would make with that, Lo, is that we sort of point to AI as being the solution for all this, but the NHS is still using fax machines in some areas.
That's kind of my point.
No, but this is the point. It's kind of like, well, it's not the fact that we've invented AI is not going to change this. What we need to do is break down some of the guilds that are protecting these professions. And I mean, that's the big hurdle, is things like the kind of British Medical Association kind of, doctors, but on the law side, a lot of paperwork could presumably have already been replaced. And it's all about professions protecting their their leveled up status, if you like, and rather than the technology lagging, because there's lots of technology that could already improve all of these areas that wouldn't require artificial intelligence. I mean, simple algorithms and spreadsheets would work very well for things like triage if, we were more, capable of getting them into all of these different parts of the bureaucracy. We've kind of moved off the interview, haven't we?
We have totally, and I was about to start talking about something else altogether, and then remembering that we're supposed to be talking about this interview. So one of the things that he did talk about when we came to productivity is he was talking about the Roaring Twenties a little.
That's a good point. I mean, there was a lot of comparison between the Roaring Twenties and the Roaring 2020s after the reopening of the economy, the sort of revenge spending, etc. When you look at total factor productivity, it has actually sort of been flat to falling. And depending on countries, obviously, the US clearly has a lot more investment in innovation and productivity. So for that, you need investments in technology, robots, etc. Even artificial intelligence is expected to increase the productivity in the service industry, not just replace jobs, but make us a lot more efficient at what we do. So I think there is a probability for productivity to increase because we won't have much alternative as businesses are facing, as you said, real wage growth. They'll have to find ways to protect their margin by investing in more productive assets. Otherwise, they'll struggle and underperform. So I think it is.
And I remember you and I talking about this a lot in 2020, 2021, how we fully expected there'd be a Roaring Twenties coming. And I wonder if that might still happen. I've started seeing mentions, again, after a break, mentions of the Roaring Twenties popping up all over the place. Ed Yardeni at Yardeni Research is always talking about his Roaring Twenties outlook and how it centers on the technological innovations, etc., that we were talking about in this podcast, and that he thinks that this productivity boom is coming back, and that is reflected in the moves in the stock market this year. And so this is not just a pop in a bear market, but the beginning of a new bull market that reflects this massive productivity surge. So this idea of the Roaring Twenties is still out there. I don't know if you remember a few years ago, maybe it was last year, Bailey Gifford had a conference and it was called The Roaring Twenties, and we all got notebooks with the Roaring Twenties written on the front. I still have that notebook, and I must open it and see what it says inside to remind myself of what we thought was going to happen, and I'm afraid what actually happened. But it may come back. Maybe next year, John, you and I will be talking about the Roaring Twenties again. What do you think?
I'll be honest with you, I feel pretty optimistic. I can see the Roaring Twenties being actually coming back and actually happening, because there is so much pessimism at a high level. And I'm not saying, I don't necessarily think interest rates will break anything or explode anything. I just think, sort of feel that either something, quite drastic will happen, or actually we'll see a boom on the other side of this, because people actually realise, well, wait a minute, actually nothing particularly bad's going to happen. And then what we actually need to do is just get our heads down and get investing. And maybe high interest rates will get rid of some of the extraneous rubbish and the misallocated capital, and we'll start focusing on what matters. So I do. It's a weirdly uncertain set of outcomes, even compared to the usual future uncertainty, I think.
It is, but I keep looking at it and thinking, as you just said, high interest rates will solve some of our capital misallocation problem, and the labour shortage may solve other problems. In that it is when there is a labour shortage that companies have to get a grip and use technology to solve their general economic problems. And I promised I wasn't going to talk about my holidays, but back to my holidays. So one of the things that I did in Sri Lanka was I visited quite a few tea plantations because I love a plantation and I love a factory, right? So I've also visited a couple of tea factories, which was absolutely fascinating. And one of the things that constant complaint out there was a shortage of labour, that it's really hard to get people to pick tea or pluck tea, which seems to make sense to me because it's extremely hard work and it's horribly underpaid. You get 1,150 rupees a day as a base pay for plucking tea, which is about £3, I think. So really not very much. And the tea pluckers in the hills around Kandy are demanding a doubling of their base rate, which seems entirely reasonable. And there's also a incentive program on top of that where you get another 50 rupees for each kilo of tea that you pluck, etc. So it's still extremely low wages. Even if it was doubled, it's still extremely low. However, a doubling of wage from whatever level plus a labor shortage means that the plantations are having to look at alternative ways. Look at how can we make this more productive? How can each person have more tea picked at the end of the day? And so they've started looking at mechanical pickers, which is amazing because one of these machines, and go look them up online if anyone can be bothered, because it's quite interesting to look at. You can double or triple the productivity of each tea picker, i.e. the amount of tea that they pick every day. Using a variety of machines. There are two in particular, one that is used by two people and one that is used by one person. And this is extremely innovative. And it's a classic example of employers going, okay, we can't get enough labor and we can't afford to pay labor what labor needs, or maybe you can afford it, but you don't want to, however you look at it, right? And so we need to come up with an innovative solution. And suddenly everyone is inventing ways to help a picker double the amount of tea they get during a day by using mechanical pickers. And I found that very interesting, just because it was an absolute classic of the shortage of labor causes technological change genre. And that's all I'm going to say about my holidays for now, anyway. We can talk about the beaches later.
Yeah, no, we'll look forward to hearing more about it. It's really interesting to hear there's a labour shortage, like in Sri Lanka as well.
Labour shortages coming everywhere, which is one of the reasons why, I mean, we won't talk about immigration at the moment, but one of the things about the idea that we can use migrants forever to cover our own lower paying jobs is absurd, because there are labour shortages across the world. And across the world, there are people who are saying, actually, do you know what? I'm not going to do that really hard work for that money. I'm going to need a bit more. Which is entirely reasonable, right? So this is a global dynamic, not just a UK dynamic. So it makes no sense for us to say we're going to solve our labour problem by importing labour from other countries where there's also a labour shortage. You know, it might work short term, but it's most certainly not going to work long term.
Excellent.
Right, John, I think we'd better leave it there and remember everybody that a diversified portfolio is a good thing, but it's not the most interesting thing. Thanks for listening to this week's Merryn Talks Money, the Aftershow. This episode was hosted by me, Merryn Somerset Webb, alongside John Stepek. It was produced by Summer Sadi and additional editing by Blake Maples. There we go. Would you like to hear more about my holiday, or are we done here?